All right, I think it's good to go. Welcome everyone to our webinar on central bank digital currencies. On this session, we're going to be looking at developments across the APAC region specifically, and we have a fantastic group of researchers and economists, people that have either published work on the topic or will be publishing very soon large volumes of reports that range on a number of latest developments around central bank digital currencies. A couple quick housekeeping items before we begin. We really want to make this as interactive as possible. We're also touching a lot of time zones here. And so we're going to do a short intro presentation that Jupiter from Hashkey is going to present to set the stage for this conversation that we're going to have. If you have questions, we're going to try and get to them towards the end of the presentation. At the end of the moderated discussion. And we also may look to use the polling feature if you're on Zoom. So look out for that. So with that, I'm going to pass it over to Jupiter at Hashkey, and he's going to get this started. Jupiter, all you.
Yeah, thanks, Ryan. And thanks everyone to attending this event. And also thanks a lot to have this great webinar. Also the channels Win Crypto's great supporting. So I'm Jupiter from Hashkey Capital. We recently have a joint research with the blog regarding the CBDC in 2020s. Maybe the report will be released this month. So today I will share my key findings and observations of our APAC part of the report. Also today, we are quite honored to have invited distinguished guests from academia. Professor Lee, he is a professor of Singapore University of Social Science, also a professor of Shanghai Financial Economy University. Also, we have the distinguished guests from renowned institutions like Dr. Zhou, he is a chief economist of Wanxiang blockchain, and also Sato Zhang, he is a senior researcher of Nomura Research Institute. Our guests will share their insightful understandings about CBDC's design, policy, and also implementations. So before my sharing, I will share a word about Hashkey Capital. We are a fintech focused institutional investors. We are focused on the blockchain and the crypto investment. And we have a core investment focus on the blockchain technology, digital asset, and also crypto financial infrastructures. So thanks to our global deal flow and also our rigorous screening criteria, made quite some achievement in the last year. So one thing I'd like to mention is that we are adopting the research-driven strategy, backing by the infrastructure, backed by the industry experience. So talking about the research, we Hashkey Capital put a lot of resources into different topics in the blockchain and crypto spaces. So definitely CBDC is a quite hot topic in the industry. So need keep an eye on. So my sharing will start with China's CBDC plan. It's called the Dcep, the Digital Currency Electronic Payment. I will share about the design features, tech attributes, and also the latest development. The first thing I'd like to share is about the design insight of the China DCEP. I will quote the former governor of PBOC, Mr. Zhou Xiaochuan, saying that the central banks, the PBOC, will play a critical role to set rules and lead the whole process. And it will achieving 100% of maintain circulation stabilities. And also it would like to promote market competition, but not prevent distort competitions. Also, the technical design will not be predetermined, so it will come out as a result of market selections. So big market players like banks or tech giants are also welcome to participate in the pilot test of Dsap. So the Dsap key design can be concluded into three phases. First is one token. The second is two database, and the three is three tokens. The one token is Dsap tokens. It's a M0 kind of tokens that can be transferred in the digital wallet. And the two database, you know that these will be carried out in two levels. One is central banks, the other is in commercial banks. So there will be two levels of databases. The three centers will be certification centers and the registration centers and the big data analysis centers. It's for the central banks, also the regulators through tracking and also make sure that the transfer or the spend of the Dsap token is valid, and also to make sure the identity of digital tokens is valid. And also the big data analysis will try to prevent some illegal activities, especially in regarding to some economic activities. So the key technology attributes of Dcep can be concluded into 5 aspects. The first is double offline payments. It's a core feature that Dcep have. Because the Dcep is kind of M0 substitute, but it can be spent just like cash. So the payer and the receiver don't have to be online when the transaction happens. They can use the near field communication technology to make that transfer occur. But after that, they have to reconnect to the internet to upload the data for the validator from central banks to see if it's a valid transfer or not. And second, it will adopting the Utx model. This model quite prevalent in the current cryptocurrency industry. It's also the model that Bitcoin using. So it's be adopting token model rather than account model. So I think Dr. Zhou will share more insights about that. And also the Dcep will adopting anti-counterfeiting authentication, also the TE-based digital wallet, also the KSE and AML technologies. It is to make sure that all the transactions will be verifying authenticity, and also the ownership of the digital currency is valid, and to make sure that wallet of the user is safe, using some remote attestation technology based on the mobile root trust. Also, the KYC ML is quite crucial. The central banks will use big data analysis to apply to prevent anti-money laundering and also the anti-tax evasions. Also, we see that from recent news that the Dcep will be piloted and also has been piloted in 4 cities of China, including Suzhou, Chengdu, Xiong'an, and Shenzhen. Now we also see that big 4 banks have their Dcep wallet screenshot released recently in the internet. Typically, they share the same functionalities like scan, remit, receive, pay, and touch. I think touch is for the double offline payment scenario use. And the scenario that the pilot city will be used is that first, we heard that the big 4 bank staff, they were using it to paying their salary using the Dcep wallet. Also, they were using the Dcep 2 tokens to pay some utility bills like the electricity bills or the bus fees. Yeah, there's some very practical scenarios that Dcep in this pilot will be using. So we'll see some practical test results and data in the future to come out. And also, I'd like to mention that Dcep is not only about the technology, it's also a innovative financial instrument. So we have to consider how it interacts with the current financial system. So 2 aspects I will be mentioning here. The first, the Dcep and monetary policy. We made a very simple estimate here. If the Dcep could potentially account for 10% of M0, it will be roughly only 0.5% of M2 according to the data of the end of 1919. So quite smaller than that level of the third-party payment. So I think also the regulator will have some policies to restrict the transfer from M2 to Dcep in a moderate level to make sure that there will be no too much effect on the current commercial bank's balance sheet. And also, there will be some risk considerations to be considered. 2 aspects here. One is disintermediate, another is bank run. So disintermediate will consider that when Dcep has been into circulation, the central banks will have a greater role in the financial system. The commercial bank's status maybe have some negative effect. So, but it's quite crucial for the current financial system. So have to consider that in a strong way. And also it's a bank run. The bank run is the common users will think the Dsap is more attractive than bank deposit. So especially in some stress period, there'll be some deposit flight from the commercial bank into the central bank Dsap. So this is something have to be considered. And also the interesting part is the China, we have a quite large mobile payment market. So some experts from mobile payment industry have shared their views about the Dcep will have a negative or no effective on the current mobile payment market. So the key argument here is that the Dcep is still in early stages. So by our estimation, maybe in the first stages, the size is still smaller. But also the technology companies as Alipay or Tencent Pay will make some progress also method that you can implement the technology that Dcep use, or even directly implement Dcep into their current mobile wallet. So the competition landscape of Dcep and mobile payment is still can conclude a result. Currently, we'll see more data and more test result to be released, and we can see a more clear picture in the future. So this is my sharing about the China Dcep. Also, my second is I will share some other APAC projects to see what's your designing mindset here. So the first is a Hong Kong, Thailand Eastern Line Rock project. It is a combination of HKMA and also Bank of Thailand joint research. It is based on R3 CODA. It is wholesale CBDC only. The core parts of this joint research about corridor network and carry out cross-border fund transfer. But it's still in the POC stages. But we can see the trend that the global central banks in different regions or countries, they are pursuing the experiments in testing how the wholesale CBDC can be used for cross-border transfer or the cross-border money remittance. The second is the project Bangkok from Cambodia. It is a quite different way that designing CBDC. We can call it app-based quasi-form of CBDC to carry out payment gateway. It is not a typical CBDC we think in concept, but it's more like a mobile payment system. It directly connects to a bank account. So, but it is promoted by the Central Bank of Cambodia and to solving some current monetary problem in Cambodia to make sure that their de-dollarization process is going to smoothly with the help of this new form of quasi CBDC to help them. And yeah, a third one is Singapore UBIN project. I think Professor Lee will share more about that. And I think the UBIN Prize goal is to develop a similar and more effective alternative system based on the digital tokens issued by the central banks. And also will help the MAS and also the industry to better understand the distributed ledger technology and its potential benefit throughout the whole experiments. The UBIN project is not only about the CBDC, but also a research initiative by the central banks in Singapore to see the possibility that transfer the current financial system into a more DLT-based financial structure to test its possibility and to see if there are any benefit or risk occurring in the experiment. So it had 5 different phases. Each phases will focus on different topics. But finally, I think eventually Singapore CBDC will also be carried out based on the contribution of this UBIN project. The UBIN project starting from early 2016 has been collaborating with different investment banks, different financial institutions, different central banks around the world. It's a huge and a long process that can learn from other banks in the world. And also the last part is from Japan. I think Sato-san will give deeper insight regarding these issues. But something I'd like to mention here is that the Bank of Japan has not announced any plans to issue CBDC so far. However, the Bank of Japan is actively studying the potential benefits and also risk of CBDC. For example, it has a collective research collecting with European Central Bank called Project Stella. Also, the BOG has a report regarding the legal issues of the CBDC. Another thing I mentioned here is that statistically, Japan's currency in circulation percentage is quite high compared to other cities. So the central banks will have a considerable launching CBDC considering this current situation. I think Sato-san will have a more review from the localized view. Yeah, so that's all my sharings. Thanks for your attention. I will give time back to moderator and so the panelists. Thank you. Hello, Ryan.
Sorry, I was muted. Classic Zoom issue. All right, thanks, Jupiter. So I think we're going to move on from the polling question, Andreas, so we don't need to do that. But I think a good place to start this conversation is just a little bit of level setting. When you talk about central bank digital currencies, I think what tends to get lost in the conversation when you start out is the fact that the term is quite broad, as Jupiter pointed out. There's a lot of different flavors to this, a lot of motivations and visions for real applications and what this actually really the intended use cases behind some of these things. And there's also this unique dynamic of digesting the rapid pace of developments that have been coming out on the research front and on the pilot front by way of just news flow and headlines. And I think in my experience, you never get the full picture with just the headlines. So I really want to use this conversation to help shed some light for the audience on what's really happening behind the scenes. As we said, we're joined by three fantastic guests that have been spending a lot of time actively researching the topic across a number of dimensions. And so really, I want to help set some context for some of these latest developments, specifically within the APAC region. So I think a good place to start this conversation is with China's digital currency electronic payment system. One of the great experiments right now that is causing a lot of conversation across the globe, and in some respects accelerating the focus and conversation in some countries by way of just the profound implications that something like Dcep could bring to not only payments, but also just global monetary systems. So I'd like to start with Dr. Zhou. If you could help give us just a better perspective on just how serious the PBOC is in developing the system. We've seen a number of broader blockchain initiatives within China, and we've seen a lot of headlines. And we've also seen, specifically within Dcep, a couple cities early piloting the system. But I'm wondering just how serious and the priority that China's placing on this system, if you can give some context there.
Okay, and thanks, Ryan, and thanks for having me here. So I think the PBOC is very serious on the DCP project. It's one priority among several for the PBOC. As for PBOC, always the top priority is always the monetary policy, but it also has a priority for micro-prudential regulations. But DCP is a strategic move for the PBOC. So we need to take into account several facts. So the PBOC has worked on the DCP project since 2014. That's 5 years and before the Libra. Right. And China has, I think, the world's most advanced mobile payment systems. And the PBOC has lots of experience, very deep experience in how to develop and regulate the payment sectors. So we need to take this fact into considerations. So the DCP is a very serious project. Yeah.
What about just when considering where it's at today and kind of looking out over the next 12 months? We even saw this past week, ride-sharing giant Didi announced that they're going to help pilot the system. What is the likelihood we see this progress past pilot stage over the next 12 months? What does the next few steps look like in your view?
So I think for the next 12 months, the DCP will still in the pilot stage, and it will focus on the domestic retail payment, but with an expanding use case. So Jupiter has mentioned the pilot program in the 4 cities. Now it expands to Didi and Meituan. I think there will be more use case in the digital economy in China, because the PBOC wants to thoroughly understand the robustness of the theoretical design and also system design of the DCP. And the DCP is performance in the retail use case, user experience and user adoptions, and how to manage the risk in the DCP systems. I think after the 12 months, the PBOC may figure out what's the right go-to-market strategy for the PBOC, how the PBOC can work with the market players like Didi and Meituan and other e-commerce firms. Yeah.
And what about the perspective from the financial institutions, the banks that are helping roll out this pilot? Has the reception been, in your view, all systems go from the beginning, or has there been some convincing from the bank's perspective? Meaning, like, would you say that there's still a positive reception from the banks in the sense that they want to be on the forefront of this and work with the PBOC to issue and distribute and move along those kind of lines?
Okay, I think the response is very positive. So as far as I know, and I think every important players in China is payment sectors. So not just banks, but also third-party payment companies. And they want to join the DCP ecosystems, right? So, and also there are service providers of hardware, software, and cybersecurity wants to join too, because the DCP is a significant upgrade for China's payment infrastructures, and there are lots of business opportunities. And also huge investment. Yeah.
What about when you just consider the fact that if anyone has access to a digital wallet and it's compatible with DCEP, and you in theory could transact and settle with the liability of the PBOC, that idea has a lot of profound implications for other global currencies, say the dollar, and legacy financial infrastructure such as SWIFT, especially if the system became widely available. Have there been any developments or tests on cross-border functionality? And what would that look like?
So we need to take into, in the pilot programs, there is, so the pilot program we extended to foreign visitors when Beijing hosts the Winter Olympics. That's in 2022. So when foreign people come to China, and they don't need to have a Chinese bank account, and they can open a DCP wallet. And it's very simple and easy. So, and they can use the digital yuan when they are in China. So after they go back to their home countries, they can bring the DCP with them. So that's how the DCP crossed the border of China. Yeah, I think the DCP is built for cross-border payment. So Chinese has a strategic goal for renminbi internationalization, and DCP will provide a new approach for the cross-border use of the renminbi. Yeah.
I want to pass this to Dr. Li. You've done a number of papers on central bank digital currencies at large, and comparing the perspectives not only in Asia, but also to Europe and the US. I wonder what your view is on DCEP and what the implications hold in your view.
First of all, I'd like to thank Hashkey and Block for inviting me. It's already very interesting to get involved in the events organized by you. I think DCP is very interesting. First of all, it harnessed the best features of M0, which is peer-to-peer payment, and M1, which have the digital trace. So in this case here, we can view it as M0.5 because you could do offline cash transaction as in M0, but at the same time, you have the digital trace as M1. So the regulators could actually have the big data analysis to capture the movement and also the patterns, and therefore they can set different policies according to how material is the transaction. If the transaction is small, then perhaps we just treat it like cash, and the KYC requirement will then be lower, and that will actually stimulate a lot of innovation. That is the first thing about DCEP. I think the second one, which is very interesting, it is a perfect example, just like any infrastructure or public good. And in this case, the Chinese government view this DCEP as a public-private sector partnership. So in the first layer, the government is just interested in issuing the currency. But in the second layer, it allows for innovation and inviting companies like McDonald's, Starbucks, the banks and everybody else. So it is very blockchain spirited in the sense that at the second layer, you could be as much as peer-to-peer as you wish. But of course, we have seen what is happening. You have centralized governance at the issuing. But when it comes to the technology, when it comes to collaboration, well, it's free for all in some ways, as long as you satisfy certain KYC or CTF requirement that they have. And that's very interesting. And the third thing is interesting is that during the two session, in China, which is one of the big conference in Beijing, the Hong Kong and China, they proposed for the North Asia, very similar to Libra, with a lot of stable coins of cross-border to be able to do some cross-border from Hong Kong to Korea. And at the same time, in the Lujiazui conference a few weeks ago, organized by Central Bank of Singapore in Shanghai, there's a commitment from Singapore to work with China on DCEP as well. So it's already on to the second layer of cross-border. And that is very interesting as I see it, because it is like building not only public-private sector initiative, but it is an international collaboration where countries or corporates are the nodes. So we now have a centralized governance and decentralized or distributed technology that enhance collaboration among private and public sector. So I think that is the strength. And also I think in China, DCP is just very different from the approach from America or Europe in the sense that they believe that the production function, the essential factors of production function is no more land, labor, and capital. They believe that the essential production function consists of data, computing power, and the ability to raise funds. So it's more like capital transaction. So when they design the coin, they have the digital economy in mind rather than the incumbents or the old economy in mind. So when it comes to designing of DCEP, they are looking at tokenizing everything that's not being captured in the GDP measurement. And that is something really different, because you can tokenize a lot of legally not considered as securities. Then you're tokenizing livestock, you're tokenizing tuition fees, you are tokenizing a lot of household activities which are not captured in the measurement of GDP, including quality change. And if you can do that, and that is the beauty of programmable money about distributed technology. So if you view central bank digital currency as programmable money that make use of smart contracts to tokenize activities not measured by GDP as of this moment, then you have a whole new economy, the whole new digital economy that you are bringing new customer into the economy. You are bringing new instrument rather than existing model where you are leveraging more to print a lot more money to buy stocks, to buy junk bonds, to buy real estate, and then you do not really have a credit allocation, as Jupiter was talking about, that the intermediaries is functioning. So in some ways, there's a combination where the government is bridging the gap of what the financial intermediaries are not able to function at this moment. So all the bottlenecks that we are seeing in the financial architecture, China is now well prepared to solve those problems. And with that, and also with the Belt Road Initiative, I think China is bringing this beyond the bilateral swap they have with each country and make it as a multiple nodes functioning distributed ledger currency to bring it to the rest of the world. So I think it's a very interesting project. It is just not about digitizing central bank money. It is about digitalizing central bank money that comes up with new business model, serving new customer, and it has a lot to do with financial inclusion. So I hope that explains a little bit about what China is doing in DCEP.
So you're looking at it from the biggest opportunity is this inclusion, this way to bring in people that don't have access to the financial system. What are other advantages you see specifically within retail-focused central bank digital currencies when you consider in relation to other competing payment and fintech solutions? Like, why do we actually need central bank digital currencies? Is it really as simple as it actually provides that inclusion factor, or is there something else?
Yeah, I think financial inclusion is on the top of the mind for them. And then the second thing is, of course, the credit allocation become a key issue for a lot of central bank. And third, of course, the use of cash is decreasing over time. But I think in Asia, the thinking behind, whether it's from Thailand, whether it's from Cambodia, whether it's from Singapore, whether it's from China, in Korea, in Japan, it's very different, because we see that the internet economy has focused a lot on economies of scale, building up a lot of sticky customer onto the internet highway. And then they go on to economies of scope by introducing, instead of payments for e-commerce or mobility like Uber or Grab, then they become insurance services, and they keep on having the scope of services increasing, from payments to insurance to lending to credit rating and so on. So you have the economies of scale, economies of scope, but more interestingly, they have the economies of integration. If you look at how Singapore is doing, we are moving from experimentation to commercialization, as I quote Mohanty, which is the head of the FinTech Innovation Group. So we are moving from experimentation to commercializing with Temasek and also banks. Temasek is our sovereign wealth fund, to integrate platforms. So in Singapore, just like in China, we do not view the silo structure of the platforms as given. We have the trade trusts, which do certification on the blockchain. We have the GATS, which actually help out with supply chain financing or on the blockchain. We have the banks doing supply chain like DBS, supply chain financing on also blockchain. So it is a economies of integration of blockchain platforms across the entire economy, not a silo of finance or silo of trade, silo of supply chain. No, in the new digital economy, they are all one. So you have a new economy. Digital economy is the economies of integration of the internet platforms. And more interestingly, like China, they have the economies of convergence of technology, which again is what Singapore is looking at, convergence of technology. So blockchain alone cannot solve a lot of problems. We cannot ensure that the first layer of the original data that put on the blockchain is actually verified. It's only after we put on the blockchain that we can verify and authenticate. But you need IoT to ensure that the blockchain data, the first, I would call it initial data, incorporation in the blockchain must be verified and in existence. So we require IoT, chips, 5G. So there's a convergence of technology that we are now looking at in terms of big data, AI, A, B, C, D, E, I call it AI, blockchain, cloud and cybersecurity, D for digital devices and data technology, E for environmental friendly technology like solar panels, because 50% of people have probably no electricity in Asia, and then F is financial inclusion. G is 5G because you need decentralized communication as well. So, so it's A, B, C, D, E, F, G, and everything is moving in the same direction. So we have economies of scale, economies of scope, economies of integration of platform, economies of convergence of technology. And Asia is looking at it as an entire transformation of the economy. They are not looking at the silo regulation. That is the difference. I think that's the main difference between US, Europe, and Asia that I'm seeing. I hope that helps to understand what is happening.
A lot to unpack there, and nowhere near enough time to get through that all. I think to summarize that, a question that we see come up a lot when reaching out to people that are actively researching is this idea of whether we actually does a CBDC actually need a blockchain or DLT to provide value. And I'm wondering your thoughts there. Is the blockchain and programmable money what's actually required to provide that stepwise improvement and inclusion, all that stuff? Or could it be something as simple as enabling narrow banks or accounts at the central bank that could also help with that in partnership with, say, the private market to help just distribute those accounts? Is blockchain needed?
Am I supposed to answer that? Okay, actually, the Dcep is not a blockchain base. They are just using the technology they harness the best feature from blockchain. And that's the beauty of, centralized governance and, distributed ledger combining. Because to be realistic, I mean, we all started thinking that everything can be decentralized and we can distribute trust all over the world. But that is not the case. Even in Oracle, everything that we started has to start with centralized. Even Satoshi, when they started Bitcoin, is only him. And then later we have Hail Fanny, right? So everything we start will have to be centralized, and then we continue to distribute trust. And this is the key thing about what central bank is doing. In the off-chain, it has to be initially clearly have to be centralized, and over time you distribute this trust across all government. And that's why the question about KYC and so on, if you don't trust China, then you will need the help of Singapore, you will need the help of Hong Kong, you will need the help of Japan. So therefore, you need to distribute trust among the government, and everybody play their roles. There is no there's a G0 world. It is not a G20 world. It is a G200 world, because the rest of the world have to come together, and we have to equalize the power amongst all the world. And this is the power of blockchain, right? We need to distribute trust among the government, but it has to start with centralized governance. And this is what, well, I call it cypherpunk government mentality that we are thinking about. So with that, I think over time, you will see more and more government coming to be the nodes. And then every single government who wants to make themselves as a center will be shunned and will be, people will not take that seriously. And so this is a real challenge to shift the payment system, right? So this is where we can talk about how the world payment system, why the world need a new monetary system, so that the 200 countries, the 50 or more % of the people excluded from the current financial system, how do we include them? The answer is that the government, who are the central authority, need to work among themselves and continue to distribute trust. And blockchain is the best virtual trade agreement that we can have, because you have trade agreement, everybody got to come to the table and agree with every line of the agreement. But in blockchain, 5 or 10 governments can come together and have a virtual trade agreement, on the blockchain. If you don't like it, then you change the code and you can have your own blockchain, and whoever has the best blockchain will have more government joining you, because the incentive system that you set up to level the playing field will be the one that have more countries coming on to the blockchain. So I think blockchain is going to be important because it improves the collaboration among government and empower every country with an equal footing. And that brings more equality and justice and more inclusion to the entire world.
I'm fired up. Yeah. So advocating for a collaborative approach rather than a silo and this quote unquote space race narrative that gets thrown out when thinking about the US versus China in regards to their own digital currency plans. Really interesting stuff. I kind of want to shift to what's going on recently at the Bank of Japan. I think Kodai is nearing publishing research that explores kind of the difference between what's developing with China's DCEP and some of the work that the Bank of Japan has been doing. This week they announced, I believe, that they're accelerating their interest or seriously considering to issue digital currency. And kind of getting to the collaborative approach that Dr. Lee's talking about. They've in the past have worked with the ECB on projects called Project Stella. And I think the Bank of Japan, just Japan in general, offers a unique case study in that cash usage is actually quite high still relative to other countries. So I'm wondering, Kodai, if you could kind of highlight some of your work specifically within Japan.
All right. So once again, thank you for having me. Great pleasure to join this meeting. And I was so interested in the initial presentation by Jupiter and also the conversation between Dr. Zhou and Professor Lee. So I would like to highlight several things from Japan's viewpoint. So first of all, Bank of Japan has currently no actual plan to issue CBDC so far, as Jupiter mentioned on his presentation. However, Bank of Japan has been actively researching potential benefits and risks, not only about the CBDC, but about broader topics such as cross-border payments and also the privacy of transactions. So one of the notable projects that Bank of Japan has been carried out is called Project Stella, just Ryan mentioned. So there have been 4 phases so far, and each phase had a specific topic to be researched. So phase 1 was focusing on whether the DLT technology can be used for processing large value payments. And phase 2 investigated the securities delivery versus payment using distributed ledger technology. And phase 3, that's one of the core focus, but exploring the solutions for cross-border payments. So as Dr. Zhou mentioned, cross-border payments could be one of the main focus also in Japan. And then the latest phase 4, focused on the privacy issues. So when we use distributed ledger technology, we need to have a right balance between transparency and also the privacy of each transaction. And then overall, so far, when I read through the report published by Bank of Japan together with collaboration between ECB, they are quite neutral about the DLT technology in general. So of course, there are both benefits and risks associated with DLT, but they haven't concluded anything that Bank of Japan should issue CBDC or not, or they should use DLT or not. But they are actively researching into those topics that I just mentioned. And those topics are always the core keys that we need to think when we actually implement CBDC technology. So that's one takeaway from Japan regarding the Project Stellar. And then Project Stellar always mentioned that they didn't take care about the legal issues of issuing CBDC. This is another highlight in Japan's situation. Actually, the definition of legal tender is banknotes and coins. And when we think about CBDC, sometimes it's difficult to consider CBDC as banknotes. It's not paper, it's digital, right? So there are some arguments that it may require amendments of legislation. But if we are going to amend legislation, we need reasons to do that, right? And if we are not going to amend legislation and just interpret the current legislation, then once again, we need a purpose to do that. And Bank of Japan always put the top priority to stabilize the financial system. That's their purpose as a central bank. Then what's the purpose? That's one of the biggest issue in Japan. Why do we need CBDC? And what is CBDC? As we just discussed, right? And I think in this point, Japan gives other countries various takeaways. For example, financial inclusion is not always a key issue in Japan because already the bank account penetration is almost 100% in Japan. I think it's 98% or 99%, or it's really close to 100%. So financial inclusion is not the top priority of Japan. Of course, it's important, but not a topic regarding CBDC. And also there's less theft compared to other countries. So people just happy to carry paper cash. And also there's less issue about fake bills. So those are not those cannot be the purpose of issuing CBDC in Japan. However, as Ryan mentioned, Japan is cash-dominated country. People love cash, and because it's very convenient, and also there's less theft in Japan, so people are not afraid of carrying cash. But at the same time, when we think about the cost of handling cash, and also if we are going to make the transaction cost of cash payment of course we need
Koda, I think we're losing your internet signal.
in Japan. So that's one thing. Also, where did I go so far? All right. So can you hear me now?
Yeah, much better. We're back.
Oops.
Is he still there? All right, we might have to move on from there. Something we didn't hit on, and I want to hit on this before we move into the Q&A. And if you're on the Zoom chat, please submit questions, and we'll try and get to them all. Can everyone hear me? Okay, cool. We haven't talked at all about the wholesale use case, and I know we don't have much time, and that use case is quite complicated in relation, in my opinion, to the retail use cases, in that it remains unclear really how competitive it is, the wholesale CBDC use case versus other RTGS systems. And if Kodai is back, I wonder if you can give a quick view, in your opinion, based on your research, where you think that opportunity could be for wholesale opportunities. And if he's not back, I would throw that out to any of the other panelists that would want to take a stab at that.
I think, Ryan, I just have a quick word on that, is that, you know, there's always a talk about the retail and as well versus the wholesale. So I think a lot of countries have tried the wholesale, but the more developed your economy, the more fear you will have on the run of the bank or the industry, because you have your credit allocation, or you, given the current situation where central bank has actually, you know, printed a lot more money and there's been a lot more lending. But you're talking about the retail, which is usually 100% reserve rather than a fractional reserve system. So the switch, the percentage switch, I think Jupiter and Dr. John had mentioned, the speed of the switch between the retail CBDC as well as you know, the digital currency that's in the banking system, which is created a lot more money in there. You may create some panic at times. So the more developed your financial market is, the more worry you have, the higher risk you have. So as compared to an emerging market where you are farmer-based, agriculture-based, then you have less of a problem, because you know, you're like ASEAN, you have 660 million people. More than half of them have no formal bank account. So your problem about run of the banks is not as severe, and therefore you can move a lot faster. So to answer your question is that there's still a lot of issues about switching between retail or switching between 100% reserve to fractional reserve system. And Jupiter has mentioned about capping that at 10% or 20%, so that you can have a comparison with the M2, and then you give a little bit more confidence to people who are dealing with the system that the banks are safe, right? But we can never be sure, because we've seen in 2008, at times the bank will not trust each other. And given this COVID-19 and given the QE infinity that we have, we can never tell when that financial crisis will hit. And when that hit, I think the emerging market will be the focus for central bank digital currency, because they need an alternative payment system to deal with the kind of problems that we faced in 2009, where the entire trade system is disrupted. Because trade drives the demand for currency. So if we understand that trade drives demand, which is like the bank code that is advocated by Keynes, John Maynard Keynes in 1930, we can more or less see where the CBDC is moving over time, whichever or whoever have the most trade.
I think it's a great place to stop and roll into questions. I think to that point, we have one that kind of hits on that, directed at Dr. Zhou, and it says, do you think that PBOC's DCEP can help the internationalization of RMB without the full-scale liberalization of financial accounts?
Okay, I think this is a very good question. So the cross-border use of DCP do lead some liberalization of the capital account. For example, let's imagine a Singapore citizens, and he wants to own some DCP, but he doesn't have trade with China. He can't get DCP from the trade in goods and services. So he has to buy DCP in the Singapore market, use the Singapore dollars. So if China wants to promote the foreign ownership of DCP, so it must promote a market for the DCP versus the foreign currencies. So this is some kind of capital account liberalizations. But we don't need the full-scale liberalization. If you look at the standards of IMF, there are actually 40 criteria for the capital account liberalizations. You don't need all the 14 criteria realize and the capital account liberalization. Yeah, so that's very tricky and technical problems. Yeah. Yeah.
And something that you think so when we look at the pilots seem to be for domestic use cases.
Yeah.
When do you expect that to be tested over the next, call it 2 years, 3 years?
I think it's in the Beijing Winter Olympics. That's and 2 years. Yeah. Starting. So for the first 2 years in the pilot program, Dcep will focus on the domestic payment, and then after the Beijing Winter Olympics, it will go abroad in a very natural process.
Got it. Well, and then to that extent, we have another question that kind of hits on this. It's how does China expect to connect DCEP to the international monetary system?
I think this is also very technical questions. Yeah. So yeah. So if to fully understand these questions, we need to understand the international financial systems. So
which you can't talk about in 2 minutes, in 5 minutes.
Yeah, it's very complicated. But I only want to say this point, emphasize this point. So DCEP, all the digital currency is understand for a new infrastructure for international finance because it's based on token rather than the account of correspondent banks. So the money moved in the token systems is peer-to-peer by nature. So if you look at the money, the current and the cross-border payment systems, money moves through the several layers of the bank account, especially the account of the correspondent banks. So and in current systems, we have very reliant on the SWIFT messaging systems. So bank needs the SWIFT to talk with each other, and then the money moves through the bank account. The domestic banks, foreign banks, and the correspondent banks. But with the DCEP, the money movement and very similar to how Bitcoin move around the world. It's peer-to-peer. There's no intermediations, right? And and in Bitcoin we don't need a messaging systems. So digital currency will have very, I think, theoretically low reliance on the SWIFT system. So it's a new infrastructure. I think every country wants to take advantage of, not just China, but I think America maybe in the future.
It's this idea. It's just digital wallet technology. If you have access to it and it's compatible with DCEP, you in theory can then settle with liabilities of the PBOC. This one's an interesting one, and it kind of hits on what Dr. Lee was talking about with the trust model and the need for blockchain to realize some of these opportunities. How do international systems know the customer? And kind of going off that, will the whole world have to KYC with China?
Right. I think earlier on I mentioned earlier on that a central bank in PBOC is only issuing the currency, and perhaps up to a certain level of transaction based on the materiality of the transaction, whether you want to treat it as cash, because there's renminbi outside China anyway. So if the amount is small, then there's really no reason why you want to spend the kind of resources to monitor that. Right, that's one. And if it's much bigger amount, say 100,000 renminbi outside China, then you may begin to find that proportionally you want to have a stepwise KYC, right? So the more money you spend, the patterns of your spending is suspectable money laundering or terrorist financing or criminal activities through the big data analysis, then the more stringent is KYC. We cannot have just one set of KYC for everybody. It has to depends on the material of the transaction. And this is what, in China, they're very good in the sense that if I think that you are doing some form of money laundering, I will immediately stop you from transacting, right? This is in the centralized ledger, but in a decentralized ledger, that may be a bit harder, but there's no, because it's 100% reserve, so there's no reason why you cannot have, fixed amount that is outside China to internationalize it and leave it to, you don't need to have a bilateral swap, which is what they are doing. Anyone who joined the notes, any government who joined the notes, then we can sign an agreement, right? These are the things that we need to do. These are the KYC that we need to do materially, and that can happen because stepwise KYC, stepwise collaboration is, I think, eventually is what we'll be seeing, over time. It's just not one set of KYC. And anyway, most of the KYC we're talking now in the financial system are for the traditional economy, but China already have digital economy KYC, which is GPS, which is, of course you can use your TOR and so on, but there are many other ways. You can have an operation room like a space station and do real-time, capturing of activities. So that is the beauty of M0.5.
And then I think we have time for maybe one more question. And I don't know if Kodai's volume is working. You want to say hello, Kodai? Oh, he's still muted. Yeah. All right. Well, then I'll propose this to. Oh, wait, there he is. There he is.
I'm okay. Yeah.
Okay. Let's give you this last one. When you think about payments in general, it's the classic chicken and egg problem, and that you really need. It really requires network effects. It's a two-sided market. People need to be adopting it. Merchants need to accept it, and for it to be functional in achieving what it's trying to achieve. When you consider that CBDC from the get-go doesn't really solve this liquidity problem, why would crypto, other solutions, whether it's crypto, stable coins, or other payment methods, not be better? I guess the question is asking, how does CBDC offer better improvement for cross-border payments relative to other solutions, whether that be other cryptocurrencies or other cross-border payments? How does CBDC solve the liquidity problem?
So I think this is critical question because like when Bitcoin started, I think cryptocurrencies was really unregulated payment tool. But now the global discussion is all in one umbrella, like the discussion going on in G20 or FSB or Bank of International Settlement. They published many reports recently, and they started a word, something like so-called global stablecoin. And also they mention about crypto, various crypto technologies. But the issue is that, as we just mentioned, how we do KYC for cross-border payments in digitalized world. And that could be the stepwise KYC solutions. That's one thing. And also, as I mentioned before, Bank of Japan recently researched about privacy enhancing technologies. So crypto itself is technology, right? But we need to take care about how we regulate those things. And also CBDC has many types of architecture. If we think about the currently dominating two-tier type model of CBDC, it's not about whether CBDC or not, whether crypto or not. If we think about crypto as a pure P2P transaction, that's quite out of the scope of regulation. So all these topics are now consolidated into one question. For example, how we can better manage the global cross-border payments. And I think crypto is one of the element of that argument. So right now we cannot separate everything like A or B, not A, then why not B? It's not about that. We need to think about various elements into one discussion.
I think that's a great place to stop. And I really appreciate our panelists and those attending and spending time listening to our session today. I want to thank Hashkey as well for helping us host this event and putting and booking the panelists as well. And I think with that, I think we're going to stop the recording. But thank you again, everyone, for attending, and whether it's night or morning, I hope you have a good day.
Yeah, thanks, Ryan. Thanks the guest. Yeah.
Thank you.
Thank you.